So back to what I was saying. What I was saying.
What's up, friends, family, and fans? It is I, the S to the T to the O to the N to the E. Stony.
Y'all do know this guy, right? So what he's doing right now is just not
But you
weird.
got the J to the O to the N to the Y.
Don't drag me into this. Don't drag me into this. I want no part of it.
Yo, what is up? Welcome to L.I.F.E podcast. This is where we listen and inspire friends in entertainment. And we have two wonderful guests, friends, family joining us today who's going to drop a whole bunch of knowledge. Today we are going to talk about wealth tips. So what's up? So anyway, like I said, we have some friends with us. We got my friend Chris Capehart in the building. What's up, Chris?
In the building. What up, Sean?
Sound effects.
All right.
Sound effects. And then calling us from Dubai. No, excuse me, London. No, my bad. Maldives. I get it confused. Mr. Alan Austin from the West Coast. What up, Al?
What's going on, family?
Now, just so y'all know, Alan is traveling and getting rich. I'm gonna just say it what it is. But no, he's out there traveling, but he's joining us from the West Coast, but he lives here in Atlanta. But I want to thank both of you guys for joining us today. How y'all doing?
Good, man.
Pretty good.
Thank you so much for having us, man.
Awesome. So look, so just so everyone can know who you are, Chris, why don't you tell people a little bit about yourself, if you don't mind, a little bit of background, personal and business. Keep it a little short because you can get long-winded. I'm just kidding. I'm just kidding.
Hey, I'll keep it real short. Been in the real estate business for 26 years. Real estate developer / real estate broker / entrepreneur.
There's some more slashes on there.
Yeah, a few slashes.
Yeah.
And that's the gist of it. I work with and on the investment side with people who want to figure out how to generate wealth in real estate.
Yep. And Chris is actually also an accomplished music producer. So he has some songs out with gospel, worked with CeCe Winans, a few other big names, I believe.
Okay.
So yeah, he does that as well. So multi-talented and all that. Just got married, what? 3 years ago.
Four.
Oh, it's been 4 now?
It's going on 4.
Oh, well, it's too old to talk about.
It'll be 4 real soon. Actually a month.
Congratulations on all of that. So thanks for joining us, man. Alan Austin,
Yes,
can you
sir.
tell the folks a little bit about yourself, please, sir?
Yeah, Chris, being on the entrepreneurial side, my experience has been a bit more corporate. I've spent probably about 28 years working for several major brands, AT&T, Coca-Cola, United Healthcare, and here lately Assurant in the financial services realm. My background is business development with a focus in operations and finance. And I am currently the CEO of GS Chain that currently just got listed on the London Stock Exchange.
And if you guys don't know, Alan is a great songwriter and an amazing vocalist. Close your eyes and you don't know if it's BB Winans singing or if it's Alan. And actually, that's not even me joking. Like, he literally kind of sounds like BB Winans. So he's a dope vocalist as well, personal friend, and a hooper. He can rain the threes.
Got the Prince going on.
The reason why I'm saying all that is because there's a little bit of swag, and y'all should count yourself as lucky and blessed because those of you that are watching this on YouTube right now, that face he made in the beginning never happens. Never happens. It's always like this super serious. You're like, so Alan, how was the game? Well, the game was good. And you think he was like giving it a financial analysis or something. I'm not clowning you, man. You just make me feel immature. All right, so anyway, we have these guys here because, and I'll just say too, I look up to both of them, especially in the area of finances. As Chris stated, he does a lot of great stuff in real estate. He has helped us with Icon Studios a great deal, and I won't go into it too deep, but he helped put an ironclad deal together for us that actually saved us from a nightmare. You remember what I'm talking about?
That was you
during COVID.
Yes, that was me.
That was him.
Me, yeah.
I mean, I'm telling you right now.
next to an Enigma. I didn't even know it.
He should have a cape on right now. Like that doggone deal so ironclad, but it saved us from the biggest nightmare, and we came out $40,000 on top. So, so I want to thank you for that. And then Alan Alan is that guy where you be like, you got that friend, you be like, I know I'm supposed to be like him, but you can't really say that for like ego purposes. So, but I loved it because I saw Alan go from the bottom to the top. And when I say bottom, he was never like, broke, nothing like that. But, your regular job. But then he rose up to the ranks, and then he's VP of this, and then executive VP of this, and then he's running that. When things got slim, Alan hooked me up actually with some employment. Thank you very much, sir. You know what I mean? It was his privilege to do so. I ended up leaving because I didn't like calling pregnant people at 10 people at night. But that's a whole nother podcast. But Alan has been a joy to watch and an inspiration, and he truly, watching him has truly made me be like, yo, I really need to get on my financial stuff, like for real. So I'm surrounded by three people, and as you guys already know, Johnny is just the financial. Johnny's a little bit of a, just so y'all know too, Johnny's a tad bit of a savant genius in like everything. So like even if you have gout,
I'm humble.
He'll break it down to you like what the gout is and then how you can overcome it and make money. So so I'm gonna go ahead and stop yapping and I'm gonna let you shoot this one off.
I just want to get straight to the questions, man. Because this is a financial kind of advice type of episode.
Some wealth tips.
So the number one thing that I hear the most out in people when it comes out, somebody says, I have a few dollars. What do I do? The response is always invest. Nobody ever goes deeper than that. Nobody says what to invest in, how to invest in it, how to research into what vehicles. So from your two respective areas, you get an individual who comes to you, somebody from the music industry, they just got their first check. They just dropped in their lap. I got 40 grand, I got 50 grand, I got $100,000 to play with. What do I do first? Don't let your response be invest. How do you guide that individual?
And anyone can jump in first.
You want to start with that, Alan?
No. Go ahead, Chris.
Ping pong already. Here we go.
Chippendale.
Well, I mean, my first thing, anytime I have a client for any reason, as it relates to real estate or otherwise, I want to understand what's going on with their personal situation. So if somebody's got $50,000 to $100,000, well, that means a lot of different things. It could mean that you already have a house, you got the car you want, your credit's perfect, all that's great, and you really just have some money just sitting around that you want to invest. Or it could mean that you're renting, your car is on the fritz, you just got your first check, and you don't even have enough established to move forward. So I don't think that's a candidate for investing. I think that's a candidate for how do we get you to a position where your credit is straight, that you've got everything in place to be able to buy a house, because that's not just credit. There's other things you got to put in place. And we don't want to see bounce checks and bank accounts and those type of things. You want to make sure all that stuff is cleared up. You have to prepare to do a purchase. The car situation, you want to make sure that somebody's not going down to, drive time. I hope that I can say that.
I'll write them.
Not
I'll write them
sponsored
for-
yet,
I'll
but
write
it
them
might
for a
not
check
be there later.
I'll ask them for a
just killed
check.
one of your
They
potential
might have
sponsors.
potential sponsors out the window.
And say, hey, you're going to get a car with a 25% interest rate. I mean, so these are just, just your entry-level things when you're going into a situation where, hey, we got a little bit of money to invest, but the first question is, do you really have a little money to invest? That's the first thing I would want to figure out.
That's actually very fair, very real. Al, what about you?
Yeah, Chris, excellent answer. And I think understanding someone's current situation is key. I tend to go more basic in terms of my explanation of things. I want folks to understand that there is a difference between saving and investing, first off, right? Because you might have $100,000 of it, and some of that you might need to save, and then a small portion you might need to invest. And the reason I make the distinction is because with an investment comes the potential risk of loss.
Right.
No matter what that thing might be.
That's
right. And so $100,000, you might not want to put at risk $100,000. You might only be able to put, X number of dollars because of, to Chris's point, you have certain other things going on in your life that you might need to take care of. That's number one. Number two, from a savings and investment perspective, obviously there are a variety of different vehicles that you can get into, but the fundamental question that needs to be answered, in my opinion, is the thing that you are choosing to invest in going to provide a return that at a minimum outpaces inflation.
Right.
That's it. Right. So you can have a basket of different investment opportunities, but is that thing going to give you the opportunity to outpace inflation? Because if you're not going to at least do that, you're going to be hustling backwards.
Okay, so let's just, and we have some very smart listeners, and then we have some that are just novice, and depending on what it is we're talking about. So real fast, what does it mean to outpace inflation? I mean, it may sound obvious, but I don't want to assume.
Understand. So here's a simple analogy I can use, right? The average interest earned in a U.S. savings account right now, I think, Chris, keep me honest, is 0.06 or 0.08. 0.08%.
It's low.
Maybe lower.
Right? Yeah. Right? So, and that's per annum, per year. So if you're only making 0.06% a year, and inflation, for example, is 2% a year, then you are not outpacing inflation.
Right. You're losing money, literally.
You're losing money. So that's the simplest way I could explain it.
Okay. And so I'm going to split this up, and you guys can go back and forth. What is it about you or what you do or how you do it that you feel sets you apart from others in your field? So like and you said real estate investment, Chris, an entrepreneur, but your hands are in a lot of pots. So what is it about you, Chris Capehart, and how Chris does things that sets you apart from other people that do what you do, you think?
Well, I would say that definitely on the real estate brokerage level, when we have clients, first thing is when you speak to any real estate agent, most of the time they're going to be focused on, let's find you a house, let's close the house, and let me get my check. Mm-hmm. That's really the priority. Where with us, what I do differently is I'm actually more interested in the long-term relationship with that client than anything else. So, we will, if I go show someone a property or one of my staff shows someone a property and we go into the property and I see things that in the long term, because I have a background in construction as well, mm-hmm. that could be a problem, I'm going to address all those things, even if that means that I lose that deal, even if that means that they don't get that house, whatever that means. Because at the end of the day, we're focused. My entire team, our model is the focus on the success of that client in every area of their lives. A house purchase is a major thing. A business purchase is a major thing. Most people that are buying a business or they're buying a home or they're buying a commercial piece of real estate, that's going to be the most expensive thing they'll ever purchase in their lives. And I think the thing that sets us apart is that, one, that we always focus on the client's best interests. Number two, is that we're more creative with how we can get things done. We always keep it legal, but we always think about every different way that you can skin a cat. Mm-hmm. And so that's the other part of it. I can tell you so many deals where we've done things that seem like it was impossible or seem like I don't know how we can get this done. And we're able to go in, analyze it, and get it done. It could be a situation where somebody maybe doesn't have enough down payment money, mm-hmm. or somebody's credit score is a 580, but they want to buy a $3 million property. Well, how do you do that? Mm-hmm. There's a number of things where you look at different scenarios and then you have to problem solve it. And I really think we're problem solvers more so than commission collector.
And I can attest to, and let you chime in, I can attest to from personal experience, and personally I feel like this is very, very important, is the honesty and integrity. I really appreciate it about you. I appreciate also that you can do it in a nice way if you have to, but you give it the facts between the eyes. Like, you kind of don't worry about, look, this might make you feel sad, or like, you can kind of care less about that, because if it's for your client's best interest, you're going to give it to them straight and straightforward. And then you're very knowledgeable, I notice, about the laws and about the most current laws. You have a ton of background information in that cranium of yours. So those things I find are very, very important and helpful. I was actually being very serious.
It was a big head joke. He's trying to take
I can't speak.
I'm all right.
I can't speak.
Yeah, that's okay.
I don't. We got to get to Alan. I know.
Yeah, I was gonna say.
But I mean, real estate is a really, really broad area when it comes to talking about investment. And a lot of people, when they think about real estate, they think about the two primaries: commercial, residential. Mm-hmm. People don't think about the fact that there are 3 to 7 other tiers of real estate. You can go directly into, you can do REITs, which you're completely hands off and you're just investing into a general fund. You can buy land. You get into the whole mineral rights aspect of stuff, which is something that I'm kind of diving into now. how do you have those conversations of expanding people's mind? Because maybe they can't buy a piece of commercial real estate, maybe they can't buy a piece of residential, but they may have enough capital to go into a REIT or to even buy a piece of land and just hold it for development in the future. How do you have those conversations, or either the educational process to open their eyes to that? Because when people get dead set on I want to buy a house, from my experience, most people get stuck on that. I just want to buy a house. They don't really get creative on other ways of generating revenue that can get them back to buying the house.
And a REIT is an acronym for
Real Estate Investment Trust.
There you go.
So
that may have been
give me your direct question, Johnny.
It's more so from an educational perspective. I guess I should start with here. Have you run into clients or people in general who just seem locked in on one specific avenue when it comes to real estate investment? And then if it is, they may not have the capital to, say, buy a house, but they do have enough to start generating revenue or income in another type of vehicle.
Yes, I mean, and so that's why I had you repeat it, because it's a little bit of a loaded question, a great question, and a great point. For example, right now I have someone who came to me. They want me to mentor them in real estate. They're doing a lot of. This is on their third house flip that they're working on right now. And what I'm trying to get them to understand is that the same thing that they're doing on the residential side, they could do on the commercial side, and generate more money with less risk. I also have to get people to understand that when you're doing flips and you're doing certain things in real estate has the potential where you can lose money. I have to tell people all that I think the worst thing that ever happened to a lot of people was HGTV. I love HGTV. I love a lot of stuff on it, but people actually think that every time you touch real estate, it just turns to gold. There's not a lot of work involved. You just go ahead and you can build that thing out in 3 days and turn it, and you're good to go.
Ooh, TV's magic, boy.
So, what I would say is, yes, there's definitely a lot of different avenues, but when you talk about real estate investment trust, that's a situation where you put money in and you may not see any big returns for a very long time. You have to be prepared for that. Yeah. If you want short-term gains and you want to see those quicker returns, those are the deals that are going to come at you and you have to act on them quickly, and they're going to be a little bit more risky. At least they may appear to be. So a lot of that depends on what your appetite is, what your financial position is, what is your security position. And what we do when we deal with that type of situation, we always go in and say, hey, here's the investment opportunity, here's how you're collateralized, here are your exit strategies, and I tend to always want at least 5 of those. And these are things that you have to look at, because I know what it's like to go through 2008 crashes. I know what it's like to buy a property and you go in there and you think, hey, this is going to be a home run, and then you find out that this wood damage was termites.
And you get stuck with carrying costs.
And so there's all kinds of things when it comes to that. But we've been able to pretty much hit a home run all the time, but it's because of understanding the pitfalls and making sure you avoid them.
I know.
All right, so Alan, to you, same type of question. What is it about Alan Austin, what Alan does and how Alan does it, that you feel set people apart from you? Because especially in the crypto field, you've been involved in a lot of new groundbreaking opportunities and companies. So kind of explain that, and why do you feel, and don't worry about being humble, because we know there's no ego here, but I want honesty and truth. What is it about you that attracted you to the company you're with now, where, I mean, they literally have you running like that whole thing, like over in Dubai and stuff?
Yeah, so let me answer the second part of that question first in terms of the company that I'm involved with now. So GS Chain was really started as a special acquisition company, with the purpose of acquiring companies in a variety of different sectors, specifically in the fintech banking space, automotive, and real estate sectors. And we're really looking for companies that are leveraging what we call disruptive technologies to push business performance and add shareholder value. Now, that's a whole lot of words to say. We're really looking for companies that are pushing the edge, trying to challenge themselves from a technological perspective to try to be great at what they do. Blockchain is probably the most disruptive technology in the last 100 years. I think people get confused about cryptocurrency specifically being the thing. My opinion, cryptocurrency is the gateway drug for what blockchain is doing across industries. And so to answer specifically the question about why this company, it is that. It's this company is looking to take advantage of its resources to acquire other organizations that are pushing the envelope from a technology perspective, specifically with blockchain, specifically with fintech and banking, specifically with e-automotive, and specifically with real estate. So that's a long way of answering that second part of the question. In terms of what sets me apart, I think that, we live in an age where there are hundreds of different, elaborate machinations to get rich quick, right? And I think you see it all over the internet, all over social media. Every second person has some new scheme and some new way to do something, fantastical in your life from a financial perspective. I tend to stick with the basics, irrespective of what the vehicle is that I'm using. Basic financial principles versus swinging for the fences have always worked best for me. And so I'm honest when someone comes to me from a financial services perspective, because obviously I do that as well. And I have a trading franchise that's governed by the SEC. I'm not talking to clients about swinging to if you got $100,000 and you're looking for $100,000 in 2 or 3 weeks, 30 days, a month, I'm not the right person to talk to.
You ain't too far off though from the one vehicle we were talking about, which I'm gonna have you touch on later. But you ain't if you ain't swinging for the fences, you doing an in-park triple.
So that's a great point, Stone, because that's different. And here's what I tend to do: if I'm doing something with my own money, I tend to be more aggressive because I can do that with my own. I am not into putting other people's money at risk with my own level of aggression for wanting to do things financially. And so that's a great point. I tend to stay really, really basic, the tried and true financial principles when it comes to investing other people's money.
Awesome.
All right, Chris. Alan, I got to ask you this because I respect it. I respect the safe and the secure part, and you got 100K. Let's do 3%. All that. I'm a millennial, right in the smack dab middle of it. So much so that I took about 87% of my portfolio 6 years ago, liquidated all of it, and went 100% of that into crypto. Best move I've ever made in my life. But it was cryptocurrency, and it was at a time where I was just learning about blockchain. That's becoming a huge buzzword now. I'm starting to see Block.fi commercials on television. You've got FTX that's got, they're sponsoring World Series. Crypto.com is taking over the Staples Center naming rights. They're no longer buzzwords. These things are now ingrained into society, whether the financial services industry is wanting to catch up at pace or not. When you have someone like me who, I'm going to take the part of the question that I took from Chris, who has that dollar amount and they're looking to get their family ahead. Because right now, we were talking about inflation. Inflation's eating everything up right now. And sometimes the safe investments, you can't outpace it unless you swing for the fences. Right. How do you discuss safe methods for swinging for the fences? Because it's not always just trying to hit a grand slam. You can try to hit an in-park home run and hit a triple. There are methods of doing that, but how do you have that conversation? What vehicles are you looking for, or how do you educate people into what to look at specifically when it comes to blockchain and cryptocurrency right now?
Yeah, so there's a couple of different ways to answer that question. I think risk tolerance per individual can dictate where that conversation goes, right? If I have a high appetite for high risk, then there might be a vehicle that I might talk to you about. But if your risk tolerance is not high, then we're gonna stay with some safe vehicles. Here's my personal opinion about the continuing evolution of all things cryptocurrency and blockchain. It is still.
If you say nascent, I'm gonna throw something at you through the screen.
No. I wasn't gonna say nascent. What I was going to say is that it is still sort of the wild, wild west. It's highly unregulated, right? There are hundreds of projects that pop up on the internet where people can get involved in, and a lot of those projects are sketchy. And because it's because it remains in this space that continues to be unregulated to a certain extent, if you happen to lose money, there's not a lot that you can do.
Right.
Because those, the blockchain by its very nature also provides anonymity for people. So, there's a lot of these projects pop up, you get enticed or convinced or talked into investing in some of these vehicles that look sexy up front, promising high returns, and then rug pulls happen, and they happen frequently, right? And so I would tend to have my conversation really around risk tolerance and trying to steer people to projects that can be verified, right? Can be verified, and in this space that continues to be highly unregulated, can provide some level of assurance that a return that is acceptable for the investor is something that they want to go forward to.
Great question and great answer. So let me ask you this, and then we're going to volley back to Chris. Give us something. What's a little known secret that you know of, or even a hack, if you want, about crypto or the stock market investing that you believe the average Joe or novice investors should know about?
I think that there are platforms. I think that there are trading platforms that you can use that provide you visibility to trends and perfect entries and exits for trades across a variety of different instruments and tools.
Now, as soon as you say trends, I think AI. Is that
there's kind of like that. So blockchain is also, I don't know if it's enhancing, but it is facilitating the introduction of AI to also further facilitate one's ability to analyze instruments, whether they be crypto, stocks, mutual funds, across a variety of different platforms. So, yeah. Chris,
in your space now, before I ask this question, you started what I feel is an amazing business or company. I'm talking about One Place. You can, if you're allowed to, I don't know what you're allowed to share and what you can't, what that is, but what were some, you got other people out there starting businesses.
Sure.
What were some of the difficulties, especially the unforeseen ones, that you ran into that you feel other business owners should know about when they're starting a business, and especially a brick and mortar business?
Well, I would say that in general, when you're starting a business, you always have to make sure you're as capitalized as possible, and have some other plan B, C, D in the event that you run out of capital to get more capital.
Now let's balance that, right? Because those of you that are into the motivational and inspirational speaking, it's like, there is no plan B, just a plan A. I mean, all of that is just so you can keep your focus where it needs to be. So like Chris is saying, it is good to have contingency plans, right?
Yeah, I mean, that's my middle name. I mean, contingency plans. I believe in, like I said, I don't even go into a project if I can't figure out at least 5 exit strategies on how to get out of it.
Nice.
So I think exit strategies are a big deal. I think making sure that you're well capitalized or have a way to get to more capitalization is important. I would also say that you want to do something in that business. It needs to be something that is as recession-proof as possible. It needs to be something that is filling a void in the marketplace, and that doesn't just have direct competition where everybody's just a direct competitor and they all do the same thing. That means you're not needed in that space, because if there's already 20 people doing the same thing you're doing and you're just going to open up another burger shop, that burger better be the best burger on the planet.
Right.
Because if you're just going to go ahead and open up another burger shop, if it's just like the other 20 in the area, what makes you special?
And you can't be the one who thinks it's the best burger on the planet.
No, you can't just be you.
And it can't be your homeboys or your family members either.
Right.
Yeah.
So I have a kind of a closing question I want to ask, so to both of them. So if you have something,
I've got a both of them question too.
All right, you go first.
Why are you always the closer, dude? The arrogance.
That's what I do.
My head is big.
But that's not how I was setting this up. I just been doing a lot of talking, so I was trying to be.
I understand.
Okay.
I mean, I asked them, they got to my stuff exactly how I kind of figured the both of you would answer it. I mean, it's still very generic, and again, it's case by case basis, so you have to talk to somebody on what their position is. But giving someone a more direct, broad response to my questions is a lot more helpful, I've found, because people generally don't have that. Now, to my last question, I mean, it kind of ties both of you in, real estate and crypto, two worlds that I live in. I dabble and tiptoe in both. I do have some property. As I said, I own a lot of cryptocurrency. I think, Alan, from what I've ascertained from what you've said, is that one of your ventures is actually working in this space right now. Tokenization is a huge thing right now, and everybody's talking about the tokenization of everything. Real estate is one of the primary ones right now. Yep. You've got a couple of different blockchain companies now that are actually building platforms to allow the tokenization of real estate assets globally and allowing people to treat those assets as almost like REITs, where you can buy them with a token and invest just from the, from your couch into, a new timeshare property in Dubai or Mumbai or wherever you're looking at. Yep. From your two perspectives on just the legacy systems from a financial perspective and from how real estate has worked, the convergence of these two industries right now, what do you see some of the pitfalls that people should be looking for? And what should be some of the excitement areas that people should get to quickly to not look at it as a taboo thing to get into? Because obviously a lot of real estate investors now are saying don't touch it because it's, kind of like what you said, the Wild Wild West, you can still lose a bunch of money with it. However, everything's been tokenized almost anyway. Your credit cards already have tokens built into them. You haven't known that, but it's been that way for a decade already. So once property is tokenized and you can liquidate assets without a middleman, without having to get an appraisal, without having to, take 80% of your value out of it, and you can buy property around the world with whatever you have. Again, back to it. What are some of the pitfalls that you guys see in that converging area? And then what excites you that people should allow that to kind of be their carrot to get them into the rabbit hole?
I'll take this one first, Chris, since I had you go first on the last one. I think from a pitfall perspective, it really is more on the traditional institutions. And I mean that by saying if they don't get on board, they're going to get left behind, right? I mean, look, here's digitization of finance is already a foregone conclusion, right? It's here. It's going to continue to be advanced. And if traditional financial institutions don't find a way to integrate this new technology with the current service offering that they have, they will get left behind. There are exchanges popping up left and right that are making it easy for people that would be, I would call them unbanked or underbanked, to get into the financial services game, right? And if banks aren't willing to change, right, and allow this new technology into their space, it's going to be bad for them, in my opinion. What's exciting about this, to me, is the average person who could not otherwise get involved in, for example, commercial real estate. The doors have been flung wide open with tokenization, right? And that's an exciting thing. It increases the investor pool for developers. It does make it more accessible for the average individual to get involved in the real estate game with the tokenization of real estate. So that's my opinion, Chris.
What does that sound like to you guys? It sounds like record companies and streaming, does it not?
Yeah.
And independent artists. Yeah. Yep.
I would say real estate is one of those still unique areas where we say it like this in the industry. It's one of the few products left that's still a man-made product by hand. A factory does not make a piece of real estate.
Well,
they have that.
Talking about 3D printing stuff.
Yeah, they've got that, and they've been doing. I mean, we've been talking about modular homes. We were doing that 20 years ago, but none of that has ever kicked in and worked.
Up, yeah.
None of that has ever kicked in and superseded the way that we've been building houses for ever.
I mean, is Metaverse about to change all that too?
They say all that, but at the end of the day, you got to have a place to put the headphones, the stuff on, right? To put the you got to have a place to sit and do this.
Okay. Yeah.
So there's certain things that are never going to change.
Right.
And so as much as we want to, digitize, you're gonna still have to have that brick and mortar. And I tell people, brick and mortar was what makes the world go around. If you go back to the Bible, even the whole Bible, where they were talking about land, everything's talking about a piece of real estate. Land is not going anywhere, and so land is still at the end of the day a very important thing. So what I would say, as far as that's concerned, from the tokenization aspect of it, I think that's definitely going forward. I think that's definitely the way of the future. However, I would still say that as much as you can own yourself on a deed, I still think that's going to be the thing that's going to supersede everything at the end of the day. Who owns the property? If you buy a shirt on Rodeo Drive, or you buy a shirt in Bankhead, and if it's the same shirt, the reason why the price is so different is because of the real estate. What are they paying for that real estate? What is the rent cost?
Right.
So at the end of the day, you know,
I got a part B. Can I throw a part
Sure.
B before you get to it? Because that just threw it. Okay, this will be the last thing I say. I promise. Okay, so the cool thing about crypto, blockchain in general, it creates fractional reserve investing, which is what we were talking about. Having a larger pool of people being able to get access to investments without having to you don't have to be an accredited investor. And it goes back, we didn't even talk about that earlier, but having to make the minimum $250,000 a year or having $1 million in net worth. If you've got $20, you can put $20 into this investment. With fractional reserve investing and what you just said, brick and mortar not going anywhere, however, the footprint is shrinking. What did the two of you see the future of valuations being? How do we value these brick and mortar spaces when you have pools so large and people with direct access? Like you don't need 4,000 square feet anymore for an office space. You can have, like you said, just a spot to put the headphones on. If everything goes into the metaverse, how do we value hard real estate, physical real estate, when everyone has access to it?
you want me to start that one, Alan?
Yeah, go ahead.
Well, I think we think about 2008. 2008 crash came from a scenario where Wall Street decided to say, hey, we've got these loans on this real estate. Here's the valuations. Here's how they're rated. And we are going to now take these, package them up, and we're going to trade them like stocks. And now we trade them like stocks, and now you have people who weren't able to necessarily invest in it before, and they were able to actually get into buying those stocks, which were those mortgage-backed securities,
Yep.
right? So they started buying mortgage-backed securities, and that's what started happening. And then one day somebody realized that, wait a minute, this paper wasn't really what we thought it was, and hence the whole trickle-down effect that ended up happening in what we call the recession, or really the minor depression of what happened in 2008. And so whenever you get into real estate and you get into the turning real estate into a trading platform of any kind, if it's digital, whatever, it's just one of those things you got to pay attention to, because the valuation that you just mentioned is critical. It's not, when you get into trades and you talk about a business or you talk about a Fortune 500 company, any valuation that goes on a company, in that company, is really decided by a number of factors, but none of those factors are really that concrete. It's those are kind of like That's why you can look at one company one day and look at it the same company the next day, and the value of it is different based on what's going on in the trading platform. Right. But real estate, the value is really the value. So at the end of the day, I know if I have a commercial real estate and those tenants are paying a certain amount of money per month, and I know what my net operating income is, I know what my cap rates are, and I know exactly what that valuation is based on those numbers. When you start putting in all these other situations with trading platforms, now you're kind of skewing what those numbers really are. And now you're kind of going to Vegas with real estate, which is exactly what happened in 2008. And so you can end up creating the same type of problem that you had back then. I am not saying not to invest in it. I think people will make a lot of money with it. But I also think that there's a downside to that part of it too when you get involved with real estate, because it's real property. That's why they call it real estate. It's real property. It's not like what investing in a stock in a company is, which is my very last point with that is, that's also the thing I love about real estate, is that I get to control what that property does. I get to control that investment. When you invest in cryptocurrency or you invest in somebody's stock, which I have some too, I'm not knocking it, I think it's a great thing, but you don't have any control of what happens behind the closed doors of those companies, of anything going on. And just like Alan was saying, some of it could be sketchy depending on what it is, because you don't see the inside of that. But when I go buy a piece of property, I know exactly who's controlling it, what's going on with it, the insides and outs of it. And if I have partners or investors, I can actually prove to them exactly why the value is what it is and how to protect them in that process.
Yeah, there's nothing really I can say to enhance anything that you've said, Chris, other than to add, I've seen companies add value to their fractional token for the real estate by having the token equate to a square footage in a particular apartment or a room, right? So if that room is rented out at $1,000 a month and your token is 25% of that, then you're going to get $250 or whatever the interval is. That's how they're adding the value to the token. They're assigning it to a square foot in a room that's rented out X number of times for the month or for the year or whatever. And so they arrive at what your potential rate of return would be based on that.
And that is the way that it would need to be done. The issue is what happens when people get a little greedy and they start changing that model.
Sure.
Right. Or when the rents do change in a good way, how does that token then fluctuate?
Yeah.
So those are the things you have to think about.
All right, well, guys, as always, I want to thank you for having us on.
Wait. Was that your last question?
Well, I'm asking last. I'm smooth with it. Homie. Let me be smooth with it.
I'm sorry, y'all.
So as we exit out, I just want you to leave our listeners and our viewers with a personal tip from you. What's always helpful are, since we're talking about wealth and investing, what's a common mistake you've seen people make that people should try to avoid if you can? And if you don't want to answer that question directly, what's a general guideline or tip from you that you want to leave people with? Alan, we can start off with that one.
Yeah, I'd say don't wait to diversify, right? So for example, I had 100% of everything that I was doing from an investment perspective in the stock market in 2008, right? And when the market crashed, in a matter of 48 hours, $100,000 of my portfolio was gone. And that triggered a different thought process for me. So
that'll
if
trigger a whole lot
anything,
of things.
right? If I could leave you with anything, I would say don't wait to think differently about the way that you're managing your money now. There's lots of great opportunities for you to invest in, lots of great programs for you to take advantage of, lots of great assets for you to acquire. Don't wait. Do it now. Don't wait for a disaster to think differently about the way that you're handling your money.
And are you on social media, Alan? How can people get in touch with you or follow you or kind of keep in touch with what you're doing?
Yeah, that's interesting. I have not really been a social media guy, but in this role, I think I'm going to be forced to. So you can hit me on LinkedIn. I am on LinkedIn as Alan Austin. You can go to the company website is gschain.world. That's GoSamCharlie.world, gschain.world. And then those are the two best avenues to hit me up currently. I'll get a Twitter page at some point. I'm old school. I haven't done that yet, but right now LinkedIn and the company website's the best way to reach me.
Thanks. And guys, Alan is ALAN Austin. Same question to you, Chris. If you had a piece of advice or a mistake to avoid.
I would say I kind of said that earlier about understanding that there are pitfalls in real estate. But I would also say, for me, it's been the most successful venture I've ever had was investing in real estate. I mean, it's my best investment. It's my go-to. It's always been solid for me. So I would say, if you're starting out or you're investing and you want to get involved in real estate, I would just say, just use a lot of common sense. And I think a lot of times
we don't like that word common sense around here because it is so far from common.
I think a lot of what happens when people invest in real estate is they are looking at, oh, look, this is what I can make. This is what I can make. And it's just all this upside. But when you look at your numbers, look at your real numbers, look at getting multiple bids, look at the real scenarios, and also look at what's going on in the marketplace. I mean, one of the reasons why I shifted and started doing a lot of commercial real estate was I saw that the market was getting saturated with people buying a bunch of real estate on the residential side. So, which creates competition, which had scenarios where people were overpaying for property. So it's a situation where I would just basically say that connect with somebody who is successful in it, and try to see if you can partner with them on something or do something with them, because it's too much of a learning curve to just go out on your own. Just do it on your own. There's a ton of learning curve with it that people don't tell you. And if you just go by what you see on TV, you could find yourself upside down in a bad way.
So if Chris Capehart is that person that they want to partner with, how do they find Chris Capehart?
I have an Instagram. It's at Capehart Graham, which is CAPEHARTGRAM. My company website is oneplaceconsultants.com. It's all spelled out, oneplaceconsultants with an S.com. And I have a Facebook page too, and I think that's just Chris Capehart, actually.
Nice.
So,
On everything you said, all I heard was stay out your feelings.
yes, pretty much.
Yo, we appreciate you guys. Don't forget to like, subscribe, and share with your friends. We are over 7,500 now, so thank y'all very, very much. We appreciate you. As always, if you're bored, you have nothing else to do, and your life is pretty much over, you can follow me on Twitter at Stone007, and I'm also on Instagram at Stone letter O 7. Johnny.
Just Johnny Vaughn, JUSTJONYVAN, all your social media platforms.
Gentlemen, I want to thank you again so much for dropping some knowledge, a lot of gems here. Alan Austin, thank you very much, man, for tuning in from the West Coast. And my man, Chris Capehart, looking dapper as always. Thank you, sir, for joining us. You guys know what it is. We love you. Make sure you share. Make sure you like and subscribe. We are out. Peace.
So back to what I was saying. What I was saying.